What's going on with Enphase stock? It was down about 8% this morning. Is this just kind of a pullback that's an opportunity, or is there more to it? We recently covered this stock as a top stock to buy about a month ago, and I provided some price targets then. I'm going to provide an update here today as well as some updated price targets. We're going to look at a chart later. So if you watched the last video that we did on Enphase, it was about a month ago. We did kind of a mini deep dive. It was about a 15-minute video, and we talked about how this stock was behaving the opposite of most other stocks. At the end of 2022, and most stocks are selling off, this thing was at crazy levels. It was up at $340 a share. And now sitting here June 2023, of course, it's $170 a share. And a lot of other stocks, especially stocks that are tied to the AI hype train, have run really hard since last year, the end of last year. So you can see today it got down to $168.30. There were several people buying this in our Discord community. Over the past month, it's up about 4%. And there was an opportunity at one point, this stock got below $155 a share, which I think was a great opportunity to add. But if you look at this over the last year, it's down about 12%. If you look at over 5 years, though, it's up 2,483%. But looking at that 1 year chart, you can see in December, it was a $300 stock. It was $335 December 5th, 2022. And that 52-week low is 152.15. So in Fired Up Wealth, we focus a lot on secular growth trends, mega trends. And when you think of solar energy, of course, that is a mega trend. You can see in your screen here from 2020 to 2030 of a 15.4% compound annual growth rate. Now, this does break it down into solar panels, batteries, charge controllers, inverters, and others. And of course, when you think of Enphase Energy, the first thing that comes to mind, at least for me, is microinverters. But Enphase is getting much more diversified. If you watched that last video we did, we talked about EV charging, we talked about battery storage, lots of different areas they're getting into. And not just in the US, globally. You know, this chart here is just focused on the United States. And here's just a quick glimpse at what I'm talking about here. Now, this is specific to global solar farm market size. You can see 62.7 billion in 2021, expected to be 267.8 billion by 2030. That's a compound annual growth rate of 17.51%. And you can see nice growth there. Again, this is just global solar farm market size. You can look at residential. Regardless of what you look at, the trend is up. Residential, solar farms, commercial. Solar energy makes a lot of sense. And we are at a tipping point where it's affordable to do it. It's much simpler today and cost effective. I mean, solar is just going to grow. It makes sense. It's a sustainable energy. We have an endless supply of energy from the sun. In fact, on that last Enphase video I did, I shared some mind-blowing stats, and I'm going to play that again for you. Check this out. Now listen to this. This is impressive. In 1 hour, the sun creates enough energy to power the lives of every human for an entire year. So 1 hour, the sun, every single person on the planet, it can power their lives for a full year. So this is clean, renewable energy that never runs out. And solar is more practical than ever. So Enphase is going to give you that solar and battery power solution so you can store that energy from the sun. And one more mind-blowing stat here. In the last 60 seconds of this video, the sun created enough energy to power the state of Texas for 10 years, for an entire decade in 60 seconds. Okay, so right now, Enphase is trading at $169.05 a share. It's down about 7%. On Fidelity, it shows a 53.7 PE ratio. We're going to look at some other valuation metrics here. We'll also look at a chart here in a minute. Now, this is a mid cap, $25 billion roughly market cap. And again, that 52-week range, really 152 just happened here in May and 339 back on December 5th. Short interest right now in Enphase is under 5%. I think people are starting to get out of the way of this. It is building a nice base, and I think it's going to go higher. Now, of course, if the overall market rolls over, that could change. But let's look at the facts here. Let's look at some price levels to add for investors. So Enphase, price to sale under a 10, it's a 9.47. So that's not dirt cheap by any means. Price to book, 25.68. Again, not dirt cheap. Now, the PEG ratio, in a perfect world, you want 1 or less. You know, sometimes 1.5 or 2 is okay. This one's at 2.82. Not nosebleed levels, but it is a little bit high. Now, with that said, you often look at historic valuations too, so we're going to do that in a second. But the PE on this year's estimate, 32.5, and next year's estimate, 24.7. Now, I could argue for the growth that you get for Enphase that this is very reasonable. So if you look at the historic valuation for Enphase, the 5-year average for forward PE is 58.2x. And right now it's trading closer to 32 or 33. So the forward PE ratio, 32.8x. So this is a discount based on historical basis. Now, you never want to just buy based off of that, but I think it is good to have an idea of where it came from. You know, past performance does not guarantee future results. You hear that all the time. Another thing we can look at here is price to sales ratio. Of course, Enphase has a PE ratio, but it's good to look at several different metrics. Now you can see here in 2019, this was trading closer to a 1.5 price to sales, and it really took off. In 2021, this was up to a 37.25 price to sales here in January of 2021. Where a lot of growth stocks topped out really was November of 2021. This was close to a 30 price to sales. And here in early May, it got below a 9 price to sales. It's back to about a 9.5 price to sales today. So again, this is not dirt cheap, but it's a high quality company that is profitable, that has significant growth. In fact, this article here is talking about exactly that. So 31% growth for FY 2023. When you look at big cap tech companies like Microsoft and Netflix, both are trading at a higher forward PE ratio with estimated growth just in the single digits. Now, of course, it's not a great comparison. You don't want to compare Microsoft to Enphase by any means, but I think it's just good as an investor when you're trying to analyze a stock to look at lots of different variables and make sense of a picture. And I always like to talk about both the bull and the bear case. And I'm going to do that next, and then I'm going to share a chart with you and show some price levels. Now, before I do that, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, Fool doesn't tell me what to make, what videos to talk about, what stocks to cover. They're a great partner. Check those guys out. And I mentioned earlier that several members were buying Enphase Energy below $170 today in Discord. You can join our private community Patreon Discord by visiting patreon.com/firedupwealth. We'd love to have you. And if you're new here, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. I appreciate you. So the last time we talked about Enphase, and if you haven't watched that video, I encourage you to go watch that video next after this one's done. We talked about some of the reasons why the stock sold off. Interest rates is a big part of that. Supply chain disruption is a part of that. Some changes in California that we talked about are part of that. And the stock, of course, just being ahead of itself, being a little bit expensive and kind of rotating out of fashion. Then it happens in Wall Street. Stocks will rotate in and out of fashion, and you want to buy things against the grain when they're not popular, not in fashion. Right now, everybody's talking about AI hype train. Most of us are buying those stocks when nobody was talking about AI, and now we're looking for other opportunities against the grain. I think Enphase is one of those. Now, certainly there are risks, and you have to keep an eye on earnings. As a long-term investor, this is something you would accumulate shares, and we'll talk about some of these price levels. Now, if you want to know the facts here, this is really why the stock sold off right here.
Let's go to Cameron in New York. Cameron.
Booyah. First
Booyah.
time caller, Jim.
Excellent.
So everything I've seen online and even from you, this stock is supposedly killing it. But it's been all going down this year. So what the heck is going on with Enphase Energy?
Okay, a lot of people feel it's more levered to the actual interest rates that people have to borrow at in order to get the solar equipment. I happen to think that home solar equipment is here to stay, and you're getting a terrific opportunity to buy this stock much lower. So I am in the camp of...
Maybe not. I don't mean to pick on Jim, but it is pretty funny. A lot of people like to do the inverse Kramer. So just a couple days ago, Kramer recommended Enphase, and all of a sudden it sells off 8%. Maybe it's just a coincidence, but I thought I'd share. Okay, let's look at a chart. Anytime you see orange, that's a previous chart day. We do chart day every single Wednesday, Patreon Discord, and you can join us again. Go to patreon.com/firedupwealth. We're going to be doing one tomorrow. We do one every Wednesday morning. Now, on the YouTube video, we talked about $155 or less DCA, and it got to $152, so that was spot on. Then we did another video and talked about Enphase again, said DCA $165 or less, but I prefer $155 or less. Forming a base probably will run to $200, and I said it'll climb higher with consolidation along the way. So this today is part of that consolidation. It's not going to go up in a straight line, but if you look at this trend line, it is still following this trend. You can see today, this candle, this is a yearly chart, daily candles. That bottom wick there got pretty much on this trend line, a little above it. So $168 and change. Now, if it holds this trend, it probably continues to go higher. This is a Fibonacci retracement, this ribbon here, and it could come up in this level, 180 to 200. Now, this R3 is $191. This yellow line is a simple moving average. This is a 50-day. The red line up here is going to be your 100-day. And way up here, your purple is the 200-day. So it's well below that. So for me personally, if I'm below the 50, the 100, and the 200, it's generally an opportunity as long as the fundamentals are there. And this is where technicals can be very important for long-term investors because fundamentals are always first. I say it's 99% of the puzzle, but we use technicals that last 1% just to get an idea of where it might be a good range to buy. There's no guarantees on here, but it gives us an opportunity, an idea really to add at certain levels. And we know that the stock could easily come below $150. It's possible. You know, this S3 is $143. Could that happen? The answer is yes. And it would be an opportunity to add more shares. But I think the higher probability, and really when you look at charts, when you look at technical analysis, it's about probabilities. There's never any guarantees. The probability here, if the market stays bullish and it leans to the upside, this is going to climb up to $190, $200. That 100-day moving average is $194, and that 200 SMA is way up here around $240. And I don't think it's going to necessarily go there overnight or anything. As a long-term investor, if I'm thinking 3, 4, 5 years, I'm holding this, I'm trying to find the best areas to add to DCA and accumulate shares. I think, even 175 or less isn't a terrible area to buy this stock. Now, of course, the lower the better. And my preference has been below 155. In a perfect world, below 150 in DCA and try to just snag those best prices, but it might not happen. There's still enough popularity in this stock that it is going to hold some sort of a level. It has growth. It has earnings. It's out of fashion right now, but I believe in 2024, names like this will come back into fashion and they will be worth more than they are today. Now, that might not be a straight line. Again, you could have an earnings miss and you could see this stock go below $150. But that's the key. If you have conviction, you've done your homework, you understand the company, and you know that long term it's going to be worth more, you're not stressing out about short-term moves. In fact, you're excited because it gives you the ability to accumulate shares because you know the stock is going to be worth more later. You've done your homework, you have conviction. Thanks for watching, guys. I hope this video is helpful. Make sure you subscribe if you're new here. Drop a like and a comment. Have a great rest of your day. Take care.